For now, we are going to move on, though, to the North Sea. The big debate there at the moment about, a variety of issues relating to government policy, as is often the case when it comes to the North Sea. Alex Hamer, why don't we start by talking about the context for all this, which is, of course, the Energy Profits Levy, which is the exploration policies outlined by the Labour government when they came to power last year. What's the state of play and what are companies angling for at the moment?
The government or subsequent successive governments, I should say, have frustrated the North Sea energy industry. Um, Companies who extract oil and gas want to explore for it, sell things to companies that extract it from the North Sea because they added this windfall tax. So the energy profits levy uh, came in under the Tories in direct response to public anger over how much companies were earning after Russia's invasion of Ukraine upended energy markets, and there really were windfall profits at that time. Now the picture has changed significantly. We saw oil prices climbing above $90 a barrel at the time. Now they've remained under 70 for quite a while. Gas prices, went nuts, and they've come down a lot. So the argument is that this 38% windfall profits tax should not be in place anymore because the windfall profits aren't there. And there's this split, I would say, between what the industry sees as an unfair tax. So, for example, you know, the government gets a big chunk of their profits in the good times. And then the downside, these companies are able to use previous tax losses to offset their corporation tax. But then now the higher tax rate has remained. And so they're basically asking for another look at it. Labor said that it was going to continue this windfall profits tax and put it up after coming into office, and also extended it by about 6 months last year, and that's out to 2030. So there does seem to be a bit of movement on this. There's a consultation that we should have a response to by the time the budget happens, or alongside the budget on the 26th of November. And the idea then is what happens after, or the government should give a clear answer to what happens after the 2030 expiry of this levy. There is a bit of a push, well, a very strong push from the industry, that because of the absence of windfall profits, they should just get rid of it a bit sooner. That's probably politically a bit tricky for a government that's talking about raising taxes elsewhere, or the need to raise taxes elsewhere. But it's one of those things where the political reality and the commercial realities are almost in different dimensions.
The other side of things, if that's politically tricky, could be to look at the no exploration policy, which people are also advocating for a change to that policy, which in itself would be politically tricky for different reasons, given we are where we are as a nation, globe, and given Labour's commitments to net zero. But maybe that's something where they might think we're not going to reduce our tax take, or we're not going to be seen to be reducing our tax take. There are questions over the actual take from the energy profits levy, which maybe we won't get into now, but maybe they'll think about the exploration side of things instead.
Yeah, and I think one change that the industry has pointed to is that there is now a minister working across, the Minister of Industry has that role across the Department of Business and Trade and the Department for Energy Security Net Zero, DESNES, which is new. And there's an idea that the government is going to want to announce investments alongside the budget, which has been its way. We saw it with the tech, um, the tech rush a couple of weeks ago, alongside the Trump visit, and the playbook's pretty clear. They just say to companies, if you're announcing anything, just hold off so we can announce it, and tot up these big figures. You assume that people have kind of cottoned onto it by now. It would obviously be quite a dramatic turnaround to say, look at this, you know, £10 billion in North Sea investment that we've, um, sorted out for you, when they went into the election saying no exploration in the North Sea. We're transitioning away from oil, and are only using gas as a way to build an energy network, electricity network that is largely driven by renewables. So for them to be crowing about, you know, oil and gas projects would be a bit of a surprise. But I think politics is obviously not our usual area, but it seems like a pretty, things seem a bit more up for grabs.
I think I've changed my mind in the course of the answer and think it'd actually be more politically palatable for them to lower the energy profits, the windfall levy, given the lack of windfall, than it would be to change policy on exploration. But we'll see, I suppose. Mark, I want to turn to you quickly because among the various oil and gas company executives talking about this and complaining about this recently, Enquest was one of them, and you covered their results the other day. What did they say? Very much along the lines of what Alex has just outlined. What were they talking about?
Yeah, pretty much exactly the same thing. With Enquest, the point worth making is that they had part of their business model as well is that they've invested in fields that, well, not marginal fields, but fields that are often past their peak production. So they tend to get them at a reasonable price in terms of barrelage as well. But when we do have this levy as well, it does reduce their incentives to buy into sort of more marginal fields too. And the point I'd make as well is that what the government seems to have missed, and we've had actually decades of mismanaged energy policy in this country, and the present government certainly seem to forget the point that there's a multiplier effect as well in place with oil and gas assets, much in the way that fishing used to be as well. It used to be said, one fisherman at sea, you'd have 9 people on shore supporting him. And it's pretty much the same way with the North Sea too. And there's another point as well that I've often wondered, because this was introduced under the last government too, but I'm not quite sure what stands as surplus profit anyway.
Well, always in the eye of the beholder, isn't
Well,
it?
exactly. I mean, it's just it's the cash grab, but I think it's reversing. Hopefully, there's cooler heads there who realise that because of that, there's an opposite to the multiplier effect as well. If you reduce North Sea activity, then it's going to reduce economic activity onshore, and eventually that will lead to a reduced tax take. The government's funding this at the moment, and a lot of talk about things like the Laffer curve in relation to personal taxation rates too. But I think it's true of industry and certainly true of the North Sea. At the same time, this is all being announced. The Norwegians made one of the largest offshore discoveries in recent years. And they've also, I read today as well, discovered a huge phosphate resource off the coast there as well. So eventually, I think what we'll probably have to do is start suing the Norwegians for reparations for their activities during the Viking era.
A bold policy. We've gone somewhat off piece there, but food for thought. Viking era reparations is not something you hear too much about, but maybe we'll be a trailblazer in that regard. Alex, can we talk about production levels overall and what's happening there, given all this context we've spoken about? What do we see as the current kind of state of play there? Because there is, as we did allude to earlier, the suggestion that the tax take is not going to be as high as was forecast, partly due to falling production.
And following answers leaning largely on the work of Chris Wheaton at Stifel, the investment bank. What he sees is a pretty dramatic tailing off of production. So we're currently just under a million barrels a day. That's oil equivalent, so gas in there as well. And the forecasts, I think, mostly agree on that coming down. You hear a lot about North Sea being a mature basin, and what that means is that the big fields have largely been discovered, or the easy oil has come out. What it also means is that there's a lot of infrastructure there. So It's often the way of companies like Serica, for example, where they'll just look to add production through just drilling another well, tying that back to existing assets, looking nearby existing infrastructure to kind of quick investments that pay back fairly quickly. There are big fields that are yet to come online, so you might touch on Jackdaw and Rosebank in Cambo, but so there are new fields as well, but they're not enough to bring about a total increase. What Wheaton says is that under the current fiscal setup, it's discouraged investment so much that the decline will be far quicker than is largely assumed. So coming down to as low as 500,000 barrels by the end of the decade. And you kind of see that with the way companies have decided to pull out of investments in recent years. Harbour is the big example. They cut a lot of jobs in Scotland and have put their money into a mega merger into Norway. And it's things like that. So there's the big investments that are uncertain, and then the smaller investments that have probably been put back because of the initially the uncertainty under the previous government, and then there's a bit more certainty under this government, but people are unwilling to invest a lot under the current conditions.
That said, there are a couple of companies who see plenty of opportunities in the North Sea, Capricorn being one of them. Also Serica, which seems very positive on, maybe more in the case of scooping up some people who are finding conditions too difficult right now, but they are quite positive on the situation.
So the Serica CEO, Chris Cox, said last week in an interview with Peel Hunt that he saw a window of opportunity in the next 12 to 18 months to take on extra North Sea assets from struggling companies, from companies keen to divest because of the fiscal regime, and that I think is a good way to look at the industry's outlook, because Serica has made its money off buying mature assets, and valuations could be at a low now. And he really did put a deadline on it, because we'll have a bit more certainty on the levy by next year. Oil and gas prices will do what they will, but this could be a low point. He did also say that Serica had looked at Norway, coming back to our Viking friends, and it is very expensive to buy there. And interestingly, one of the reasons Labor put up the total tax to 78% is that's what they have in Norway, but they also have a lot more allowances on spending, and the offsetting is important. So the actual cost of getting a barrel out of the ground is quite a lot lower in Norway.
Which is why the companies are more expensive too, if you're interested in that kind of activity. Indeed. Well, I mean, it's a subject that is certainly going to bubble under and carry on discussions, I think, until the budget, at least, maybe beyond that. There is also, we've spoken about Jackdaw and Rosebank projects that we don't have time to get into now, but that's all in the piece. The questions outstanding about those projects, you can have a look at our piece online and in print for a bit more detail on those. But